All right. Welcome back, my trading friends. God bless you today. So, the question on your mind, of course, is how did Ben win today? Well, I'm happy to say it was a good trade in the spread of the CL minus the HO. Yep, that is right. We trade spreads here. And we're using BOSA, the most unique tool out there in the NinjaTrader space, to trade a spread. Now, a spread is where you go long one instrument and short another correlated instrument for a profit. That's right. What you do is you transform a trending market into an oscillating market or a range bound market. Now, isn't that helpful? You know, a question I heard a lot of throughout my entire history, I've been trading since, gosh, the last century, is how do you know between when a market is breaking out and when a market is trending or reversing? I'm sorry. Breaking out versus a reversal. False breakouts can really damage you. So we are looking at using spreads to transform trending markets into reversing markets. Reversion to the mean is much easier to trade than a breakout. Breakout, we don't know much. Breakouts can go very far or very short, but we have no way to target really. So we're going to trade all reversals in spreads. Here's one example I did today is a crude oil, uh, heating oil spread. Now, those are two very related instruments, right? One is the production of another. So they're related. As crude goes up in price, so does heating oil. As crude goes down in price, so does heating oil. So they're related. Um, so what I was looking at here is this spread had hit this upper region here between this dotted red line and the solid red line. So this is a severely overbought condition. We're looking to go short here. I got in a little early. I got in right about where the L is in value, right about there. I was looking at this price band line here, which is just a $600 move away from the moving average. So this price band, this green line, shows that this spread is 600 bucks above the moving average. And we're above the overbought region. So this is a severely overbought region. Now, not only that did I see, but also these red dots are telling me that the spread on average throughout history tends to be below this level, this yellow line. So that's an interesting divergence, right? So price tends to be below this yellow line. Price is way up here, 600 bucks above it. Let's go short. Another reason we looked at it was the region zones here, the regions, this dotted line here was descending. This was the most, this is the furthest distance the region is going to be today from the moving average. So these regions are away from the moving average a certain distance, and they show historically the contraction of volatility or expansion of volatility in the market. This is a time of great expansion right here at the open about 9:15, 9:30. Market opened up on a big move, but markets tend to retrace or consolidate from there. And that's what our overbought regions show. So this is a far distance from the moving average. This one is much closer. You see the red dashed line here. Let's move that out of the way a little clearer. Um, So, markets were supposed to consolidate. Markets were supposed to be, or the spread was supposed to be, or typically below the moving average. Let's go short. We did. I went short at this level right here, and I got out at only 276, actually 277 profit. So I got out right here. I was targeting the midline, and it looks like right now the market could hit that midline. That distance is a much sweeter profit, about double what I did get. But I was happy with that. Let me show you what my decision process was for that. So let's take a look. This was heating oil. This is what the crude oil market looked like at the time. So when I entered the trade, crude oil was very oversold. Heating oil was also quite oversold. Now, the way I know that was we use a statistical method of the ATR forecaster. This red dotted line and this green line, those are severely oversold. If we get outside of the red line, we're oversold. Here in crude oil, we got below the red line and green line, that's oversold. Now these are some buy signals that came along, but right at about 9, what did I get in at? 9:21 Eastern time. So I got in. I went long on heating oil and I netted 852 on heating oil, but I also got short on crude. Now this is a bad place to short crude oil. Oversold. We don't want to short it. So why would you do that? Why would you go long heating oil and short sacrifice crude oil? Take a look with me at the spread itself. So right up here, our number, this called this V dollar ratio. Some people have asked what that is. This number is telling me of some very important information, that heating oil is very volatile compared to crude oil. Heating oil is a 1, crude is a 1.4. That is telling us that in order to make these two equal in volatility, you've got to add 40% more of a crude oil volatility. So it's 1.4 to equal 1 of the heating oil. So you need to increase the volatility. So this is telling me crude oil is not the leader of this spread. So each spread is not perfectly balanced. Heating oil tends to be the mover. It has more volatility than the crude oil. So that helped me determine which of these are more valuable. Heating oil is more volatile, so I expected a bigger move in heating oil over the same time period, right? Heating oil is more volatile, crude oil is less volatile. So I gave up $580 in crude. I lost 580 in crude, but during that same time I gained 852 roughly in heating oil. So that netted me like 270 something, right? 276 or so. So very happy to do that. Now, one other consideration, guys, is here's another picture of heating oil. This is where I went long. Now this is a minute chart, and I exited at the 100 moving average. This yellow line is the 100 moving average. I tend to use that as support and resistance. So I was targeting that to get out of heating oil, capture my profits, and go on my merry way. Heating oil pushed up a little higher, but you see it generally did, find resistance at that 100. So I was happy to get out with my 852. But I was still short crude oil. So I got out the more volatile pair of the two, and I was still short heating oil. Had I gotten out of crude at the time of the break, I might have gotten out right around this area. So it was about $650 in heating oil, crude oil value. So that's a little expensive. I held on for it retracing back to the 100, and I got out at 580. So I netted about another 80 bucks in profit. So I went in together. Both of them got in together at the same moment in time, but I did leg out of the spread. So I got out of the heating oil when it hit my target line, and I got out of the crude position when it retraced back to that target line. It was only about 2 or 3 minutes later, I believe. Let's see, what moment was this? This was about 9:43. This got out at 9:46, so about 3 minutes later. Okay, one other spread now. Let's go on to the 6E, 6S spread. So this is a spread I was in. This is another highly correlated pair, the euro versus the Swiss franc. Um, I saw it touching my oversold level. Now this green dotted and the red solid, these are oversold levels, very similar to the heating oil one that we just looked at. I got in. I was a little bored, to be honest. It was not a good time to do it. This buy dot had just formed, but really I got in much too early. I should have waited for my big oval blue dot. Uh, Here we hit the what I call the stop loss line of the range. This has been a much better place to get into the spread. But I got in early and I got out with a hit of the midline. I think I was about 50 bucks in. So very low risk spread that landed a good profit as well. So I hit well on that guy. Let's see if I can show you what those two look like. Here's what it was. I'm going to draw I have a custom ruler I use too, folks. So if you want to use this ruler, it's pretty handy. It has more information than the standard NinjaTrader ruler. So I made this myself. Yes, I'm a programmer. And if you want this ruler, just feel free to ask me for the custom ruler for NinjaTrader 8. I'd be happy to send it to you as my little treat here. So I got out with I think it was about break even on, it was break even on the short Swiss franc, but I got out, I think, $31 to the good. I thought it was more than that, maybe not. But anyway, that's what I got out. Again, it's a very low risk trade. And I mention that because you can certainly add more contracts here. Certainly, there's no problem. These are very small grid increments, 50 bucks, 100 bucks, 150. So each of these green lines is an equity change of $50. $50 equity change. Had I gotten in here, that spread would have pulled in $144. That's from that point up to here. That would have been a much smarter play, even from this point where the big blue oval printed, which was right about here. So you see that we were at about $74 in profit had I pulled in that spot there. Again, happy to do it, happy to trade it. Made some money today. Very low risk. That's the key. That's the key. We don't want to. Great big returns are wonderful, but if they come at a high risk level, that's why people are blowing out accounts, and we don't want that. All right. Hey, it's been fun sharing this with you. Guys, I would cherish your feedback. Feel free to leave a comment, a criticism, or question in the comments below in YouTube, or email me. Visit my store. I think my email address is at the store. And again, this is Ben Leto. We trade futures in NinjaTrader, and we use the very unique system called BOSA. We also use the Leto channels to help us determine overbought, oversold. Again, my focus is the science of overbought, oversold, and there's some really good information there on my site. Okay, feel free to take a look. God bless you all, and have a good Friday and a good weekend. Take care.